Hello everyone. It's me, NYSE Einstein from the Florida New York Stock Exchange. It's 5 o'clock. It's May 7th. It's Tuesday. And there is a lot of red on this screen. We talked about what happened yesterday. We came in after the weekend, after the tweet, after a record high of the marketplace, and a Chinese market that was down 4% on the announcement by our president that we will be increasing tariffs and perhaps pulling out of this trade talk, and that sent the market into a tizzy. Bit of an overreaction for the early morning. It was fast, it was furious. The market proceeded to rally its way back from the lower left to the upper right and closed in a strong, almost record fashion. Yet, what does happen when these things do? Sometimes there's a follow-through, sometimes there's not. Sometimes the narrative continues, sometimes it blossoms into more wonderful, wild, and crazy things. And in this world we're living in now, that seems like the flavor of the day, the fruit du moment, as it were. We came in today and the narrative is getting worse. People, Americans, and the world woke up to the fact that perhaps the tariff increase will be way more than expected. Perhaps we will not get a deal on the table. Perhaps the effect of tariffs will affect global economic growth. Perhaps that will have a longer lasting effect on the market here in America. We came in, we opened down, we proceeded to trade down all day long. If you proceed to look at the graph, we in fact opened down and went even lower, peaking out at a bottom of about 650 points down. We did rally back at the end of the day, which we would normally call a dead cat bounce. Basically short covering. If you had made money on your shorts today and you pressed them hard, why not? You never know. This could all get tossed back in our face by one tweet that pulls back all the narrative that we've seen over the last 2 days, and the market could rally itself right back. We've seen that. Spike in volatility. That's significant. Anxiety in the marketplace. But there are only two factors in this game: global economic growth and tariffs and China trade. Both are unknowns at the moment. Both could go either way in this crazy, wild administration that we've got going on here. And that's where it leaves us for the day. For the day, the Russell was down 32 points, the S&P down 50 points. That's significant. What's up?
How are you?
Great.
Good to see you.
Good to see you. Reasonable volume at 920 million. The Dow broke below support at 26,000. The S&P broke below support at 2930, 2910, 2900, 2893. I mean, every possible support it did, and it broke down below all those. We did close down only 480. We were down 650. A minor pop in the oil and gold, not really a flight to safety. I think the sellers won the day. The buyers were on strike. And the S&P, the Russell, and the Dow pretty much got eviscerated. At one point during the day, we were 8 to 10%, 10 to 1 sell side volume. Over the day, it really felt not like a bloodbath by any stretch, but surely a significant sell side. Look, at a market with this high evaluation and unknowns on the table, that are significant anxiety creating moments here economically, globally, and whatnot. Why not take money off the table? Why not sell into this thing and see what happens? So profit taking's definitely been had. Some people making a play on the short side, and we'll see what happens tomorrow. And one day does not a market make. Today's follow-through is way more significant than yesterday's, and I think it's a fascinating market, as is for today. Anyway, that's me, the Einstein of Wall Street from the Florida New York Stock Exchange. I love you all. We're closing out today on the downside, and I'll see you all tomorrow.